Welcome to the Fintech Scaling Show. This podcast is sponsored by Scale Up Consulting, helping fintech startups accelerate customer acquisition and set up business operations to scale systematically. When you're ready to grow, reach out to us at richard@scaleupconsulting.co. Now, over to the show with Richard Doty, founder and host. Today in the show, we have Hugh Hessing, ex-COO of Aviva and insurtech advisor. Welcome, Hugh. Great to have you on the show.
Thanks, Richard, and hi to everyone out there in scaling land.
Great. So to kick things off, I thought it would be good if you could tell us a bit about yourself and the business that you're in.
Okay. Well, I'll tell about my recent past. That's probably quite relevant to a lot of people on here, and then talk about what I'm doing now. So I've been a consultant, or I've run parts of businesses, typically operations IT, for all of my life. But the last 13 years of my career have been with Aviva in a multitude of roles. But finally, that ended up in me being the Chief Operating Officer of Aviva in the UK. Aviva in the UK serves everything from motor insurance to equity release, bulk purchase annuity to savings, to commercial insurance. It's the largest B2B player in many parts of the pensions, general insurance and healthcare world. And that serves 15 million customers. And that was an absolute ball having that breadth of product, that breadth of complexity to look after in my recent times. Prior to that, I'd done everything from group transformation, where I kicked off group automation programs. Seems like a lifetime ago, 8 years ago now, but where process automation was all the buzzwords, and kind of, is it the buzzword or a thing of the past? We'll come on to that. And I've also was the CEO in Ireland of 3 businesses. And that's where I really accelerated my interest in insurtech firms in particular, and the startup scene. I was very active with the Aviva Ventures funding model, where we had £100 million to invest in startups, and I played an active part in that in the UK. But in Ireland, I ran Ireland's first ever insurtech with the NDRC, fascinating into insight in how startups are working, and the value that, and I think you called me an old veteran in your introduction there, the value that us old veterans can still add to some of these startups, I think is very relevant.
Great. Very interesting and very relevant background for our discussion. Let's dive into it. What are your thoughts on the post-COVID-19 world? What are you seeing?
It's such a wide and varied question. And as a systems thinker, I think about the broadest, most holistic aspects of COVID-19, not just the one specific. But let me bring it down to focus on 3 key areas. One about leadership, one about innovation and new models, and the link. And I'll start with, I think the long-term economic impacts are the things where I start. So obviously there will be a immediate loss of work, loss of capacity in the market, and that will affect the banking and insurance sectors. We are a reflection of the success of the economy. We are the lifeblood, the blood that flows through the economy as well. Without the banking and insurance sectors, the economy can't perform, but we're as good as the size of the economy. So I think looking at industries that are decimated, like leisure and tourism, that's going to be a longer term, and we've got to look at people's exposures on that. So I'm thinking about where are those new roles going to come from. However, innovation thrives in crisis. And with new tech comes new business models and new opportunities, and never more so than a risk that we talked about. But I can guarantee you that my risk colleagues, while talking about this 1 in 100 or 1 in 200 event, we hadn't run the playbook for a global 3-month shutdown. No one had. If anyone tells you they had, they're a fibber. Yeah. No one had run this kind of playbook. And so that rapid learning is going to be great opportunities. With it, regrettably, is going to come massive cost reduction. It is an inevitability as the size of the overall economy shrinks and the size of the market shrinks. The financial services industry is going to have to replicate that. But old-fashioned cost reduction won't do. Just stopping things, not marketing, not having a big enough investment portfolio, they're temporary measures. We've got to innovate into new models to make businesses, A, much more efficient, and B, move from the big fixed cost of the past to the variable cost of the future. So let me bring on to the new models of working, which is my second key thought for this question, Richard. Clearly, we're all working differently. You can see in Richard's background and my background, we don't have these paintings or these lovely ornate windows in our offices in London. We're both working from home. I think the 7-day week with 5 days and a 2-day weekend is going to slowly disappear. I think people's propensity to work when the customers are there, because they've not got to have the travel time, is actually going to be a great fillip for the industry. Me and my colleagues at Aviva, we've been doing stuff like this for 10 years with a company called Sensei, who provide outsourced contact center services. We then built that capability in-house latterly, but it was in mind to have on-demand service. And I think that's going to be a massive change to the way in which the lower paid within financial services, i.e. the contact center staff, the people who are providing critical services to our customers, are going to have a lot more voice in how they want to work when they come to work. Clearly, we've also got to look at the products that we sell. Now, this pandemic is passing, and I'll come to say something about the old risks are still there in a second. But people have got to think about the products and how they're designed, how they're relevant for low usage and usage-based insurance. I think with also the proliferation of frequency with which we can access data will also start to emerge much faster than it had been. And then the last thing, and this is a bit of a personal plea with my operational and technology bent, I know from talking to many of my colleagues around the industry in life and pensions, savings, environment, and general property and casualty markets, the role that the operational leaders and the technology leaders have played over the last 3 months has been, as I would have expected, been phenomenal. They have responded to the challenge. They've been the calmest amongst the executive leaders, and they've executed brilliantly. So there are pockets, but largely service is back to normal, and we've now found a fundamental new virtual way of working. Yeah. And their voices have been listened to more than at ever point. My big hope for leadership going forward is that that axis of the business and technology coming closer together, and those people who are most familiar with that, the operational and technology leaders, play an as important part in this crisis going forward, rather than just waiting for the next shot. So not to disappear and wait for distribution leaders, sales leaders, marketing, proposition people to take the floor again, but to actively work with those people who bring technology and service experience together the best. So that's my hope. They're the three things. But what I would say, we could all panic about COVID as a new kind of example of a crisis that we didn't plan for. All the risks, all the support that we provide the economy is still there. Financial services has probably never been so as needed as it is now. People will still need to prevent against floods. There will still be banking crisis. There will still be debt crisis. We need to provide the cash, provide the cover so that the economy can grow again. So our role in the economy, I don't think has ever been as important as it is now.
Okay, great. So innovation, changes in the workplace, and adjustments in products, and also the reuse or maybe the using more data to make informed decisions, etc., is a new way forward. Out of that, what opportunities can you foresee for your business or industry going forward?
As I said, many cost reduction programs are synonymous with stopping things or cutting back, and that's fine for a period. But people are going to have to find a much more variable cost and efficient model for their business going forward. That's without a doubt. I know businesses out there that lost 70% of their sales volumes that they were anticipating in late March and April. that doesn't come without a consequence on the other side of the margin debate. You might be able to ride it out. Unless you've got some whizzy silver bullet innovation for your proposition, it's the good old-fashioned, how do I become more efficient and how do I give a better service at a greater margin for the business? Yeah. So I think within that, then, automation. Now, as I said, 8 years ago, I started off group automation at Aviva. Yes, I have got in the UK probably, so I think we've got over 2,500 Blue Prism robots operating around the large breadth of Aviva's processes. And that's been absolutely fabulous for us. And Blue Prism were giving us a way to codify and automate old processes in a way that we couldn't envisage before that. However, that alone isn't good enough. Intelligent automation, how the machines are learning, how that's then going forward, how that's answering customers' queries is where the fight will go next. And the fight is already going. Yeah. I think Aviva on their property side answer on the first notification of loss. About 30% of the property claims, residential property claims, are answered on that first call. And we operate a significantly better loss ratio than Lemonade. However, how many of your companies are using that analytics and using that automation of decisioning to make a better experience for customers and make processes infinitely more efficient for both them and our employees? How are we taking paper records, forms, eliminating rekeying, getting accuracy to the right level, such that the real expertise of the people handling customer inquiries can be added rather than manual processing? Yes, we've all say we've done a lot. That needs to get some urgent acceleration. From a commercial point of view, I think it's a bigger commercial interests, both on the pensions, but certainly on the property and casualty side. They are proliferated with data in their business, how much stock they're holding, where their goods are in transit, but yet we sell them static annual contracts. And that might be fine for SMEs, but I think more and more organisations will be looking at what they're holding and when, and the variability of the risks they're actually holding. And the proliferation of data is going to allow us to be able to price real time and be much more sophisticated. And that's something that I think will emerge. And whilst you always need, and I'll say this a bit later, well, I think that you need someone looking at the horizon, scanning the horizon. I think COVID has just shown the horizon is a lot closer than we think it is. I'm not talking about autonomous vehicles and that kind of fundamental changing model, but you look at vehicle usage. Who's going to go and buy a new car when you can maybe just rent one, hire one? Getting these new transport facilities. Cars will become more important because who's going to want to use public transport? But actually buying a car might be a thing of the past in the way in which we used to envisage. And I think some of these things have raced towards us. Again, I was advocating having over 1,000, 2,000 people at Aviva who could potentially work from home 6 months ago, and we were making small steps, but no one wanted to make the big step. Today, 15,000 people in the UK at Aviva are running a brilliant business for 15 million customers from their homes. Yeah, now that's not necessarily sustainable long. And this is what I'm saying is the horizon has been brought into sharp focus through this pandemic. We've got to create the speed with which we get to the next horizon, Richard. So I think there are lots of opportunities. And on the last point, I've had too many people say to me recently that digital's their big strategy. I mean, I see digital as hygiene. What I think people need to search for is an architecture that allows infinite agility. And that may mean slowing down for a year to then have a pace to survive in a retail or B2B world even. Yeah. So if you haven't got agility in your architectural stack, it's not when you die, it's when you die, not how quick, whether you'll die or not, in my view. The adoption strategies, again, COVID has been a great adopting strategy that no one had ever thought about or dreamt and designed. Therefore, don't give up on building the functionality. far too many digital programs have been run on business cases. If you're going to digitize your business so your customers can serve themselves and don't stop on a business case approach. Because what you'll find is you'll have 60% great functionality and 40% will be average, and there'll be customers who just want to digitally adopt. And you've got to look holistically at your big investment and either make your propositions far more straightforward so you can provide self-service capability or finish the job. Halfway house, I don't think will fit as we go forward. They're my thoughts. Some might disagree, but they're my thoughts.
Very interesting points. I look at it as maybe rethinking many aspects of daily and work life.
Yeah.
And start finger pointing and really asking the questions as to how we move forward, which I think you alluded to in some detail. Out of that, what do you think are some of the main challenges right now?
For me personally, I'm looking for my next big corporate challenge, and so that's a big personal challenge. But I'd planned to be doing quite a lot of travelling with my wife. Mandy and I were going to be going around the UK, travelling to a house in France, but unfortunately, that's our biggest personal challenge. But we're fit and healthy, so it's all good. And from a business thing, one of the hardest things that I've experienced, and I've seen many businesses from afar, and certainly Aviva, stopping things is the hardest thing. Well, look, we've all stopped projects in our portfolios over the course of the last 3 months to focus on building laptops, getting virtualization set up, building safe infrastructures for people to operate. I think having the discipline to not restart everything and I'll call it pet projects, but everybody knows what I mean. There's a core things that you have to do from a regulatory point of view. There's a core things that you need to do from a customer experience or efficiency outcome point of view, but there'll be a lot of periphery, and that's going to have a lot of consequences. And I think that's going to be very difficult for organizations to face into and set. What I would be doing right now is setting a higher bar. Yeah. I also know that the vast majority of companies that I talk to are coming out in the initial phase of the crisis. So they've settled service, they can operate. They're now thinking about their revenue streams and how they get them back up to where they anticipated them to. Now, in my view, it won't be the natural thing of leaders in large corporate businesses to increase the level of innovation scanning. I think now is more the time than ever to have a little bit more of your portfolio focused on scanning the horizon for the innovation or the tech that could help build a different model. Yes, the insurance risks are still there. Yes, the main requirements of banking will still be there. But if you don't have your eyes open to where innovation can take your business forward to the next model generation, there is a chance you could get chipped away out faster during this next period as others come in. And it just will be culturally at this page, what you want me to invest more in something that doesn't give an immediate return? Yes, would be my answer in proportion, but yes, and go harder on the easier accessible cost and agility measures so that you can balance the books. I think that will be hard. Fundamentally, I think I said it up front, Richard, I think the hardest thing to anticipate is the overall impact COVID's going to have on the economy, and therefore the impact on each of the people on this call's businesses, either whether you're in a startup, whether you're an independent consultant, or whether you are part of a large corporate. Anticipating and getting that scenario right and how you react to the different scenarios about how quickly you're part of the economy that's most important to you serving your customers is going to be where all the focus needs to be. And it's a hard one to predict. And I think that's one of the biggest challenges for the strategy units in bigger corporations and the people leading those business. You've got to build a very quick response to how each of those parts of the economy start to emerge. Some will come back straight away. The grocers are already there. Others are going to take 2-3 years to bounce back, like airlines, leisure, tourism, that kind of thing. So it's dependent on your business and where your focus has been. But I think that's the hardest challenge. There's just no obvious playbook for that, Richard.
I totally understand. And if you were to put your neck out, what would your specific focus on growth planning be in the next 6 months? And how would you go about achieving this?
Personally, for me, it would be, if I was in business, it would be agility. Where am I rigid? Where is my ability to change and keep pace with changing events and changing markets the stiffest? And then can I afford the choices that I have in that part of the business to become agile? Where I am agile, how am I leveraging that to the best of my abilities for customers and winning? I think agility, again, will be a key winning, certainly in the retail space, but more and more for the SME and the workplace market. I think demonstrating your agility, responding to your end customer needs will be the decisive things. And that could be about automating processes for them or yourself so you're more efficient. It could be about re-architecting your middleware layer to make sure that you can add new propositions at pace and not rely on the old engines, or fundamentally changing the core platforms you have if you've got a long-term future in that industry to become more agile. All of those things have different scales and different paces, but that's where I would. Now, clearly, with agility should come efficiency. And if agility is too hard, then it will be in the automation space and understanding the end-to-end value chain of my business and where I've got most cost operating and where I can either use the data to make better decisioning, but certainly concertina the process for customers and automate many manual or simple routines as possible. And then have the horizon scanning out for intelligent automation technology that could maybe then take me to the next level and start answering more queries from my customers. With live chat is perceived by the people who do live chat. I had 120 people doing live chat. We all thought we were gurus and we all thought our customers love it. They don't love it as much as we do. And they certainly don't love it and will detect a robot from 100 miles. Yeah. We need to see that progress at pace. It will, but we need to see it progress at pace so we can have our operatives really live chatting on the things that really matter. And I think that's a journey that's still got to progress. And it's nice being this couple of months out to take out a real customer lens. I always had a customer view, but to take a real customer lens on how well we perceive what we were doing is doing, rather than just take our internal view. Oh, live chat's great and people seem to love it, as one example. But that's where I think the focus has got to be: agility and efficiency, and moving from fixed to variable costs for larger scale businesses. So for the innovation market, for the startup market, for the insurtech market, and for the banking tech market, there's a lot to go at there. There is an awful lot to go at.
Yeah, you are right. You touched on a few good points there. What's the biggest tip you can give our listeners? Because there are some people, some businesses out there that are on the cusp of scaling their businesses right now.
So in terms of scaling your business, there's the fine balance between letting your costs get ahead of your ability to, win that business and scale. Play the racing game would be my view. Perfect your proposition, get the sales, and then rapidly find an agile way to build the talent to keep up with the development of that. I'm seeing a few businesses who have maybe got their next series of funding and are ramping up their costs way ahead of their scalability, and they need to do a bit more insight into the markets they're going into and their propositions. What I would say is those that have got the best chance to win, you're either offering an easy implementable full-scale solution. I've yet to find one, but if there's anyone out there, then they should have sales knocking at their door, no problem. The less invasive your technology is and can be additive to your target client's end customer proposition, so their end customer's proposition, that's where I focus. I work on simple Boston grids in my head, and ease of implementation right now with runs on the board or quick bang for buck is what will allow CIOs and COOs to put things in front of their other executive colleagues that then could emerge and grow into things that might change business models, things that could then become more wider across the corporate agenda. Start small and grow big in some of these big corporates. For those of you who are out there that are selling into these big corporates, get a win. I know this is most of your strategies anyway. Be as less invasive as possible. The too many old veterans, as Richard called me, with too much pain on my back and marked scars on my back from it'll all be too simple and we'll all get it in. I'm working with one such company at the moment. They are doing some of basic paper processing intelligent automation. What caught my eye was their speed to automation and out-of-the-box accuracy. So 98% accuracy, 80% automation, out of the box, company called Hyperscience. And that attracted me. And so I'm now working with them to help them find a scale, find new places in the market, and how they then go forward and develop their wider proposition. Just as an example, what I liked about them, they're implementable, and you can make, as a corporate buyer like I am, you can make decisions very, very quickly, like within months rather than years, to go, this is something that I want to be evasive of kind of across my whole organization.
Oh, great. Really, really valuable insights, especially into selling to larger corporates. I think that will be quite well appreciated. I mean, listen, thanks for catching up with us today, Hugh. Lastly, how can people find and connect with you in your business?
Via LinkedIn, so Hugh Hessing via LinkedIn. I'm helping a range of independent contractors and consultants with their proposition material. I'm helping startups from everything from satellite imaging technology all the way to form and paper automation processing, as I've just mentioned. And I'm helping a couple of businesses from a corporate strategic point of view, how they access certain markets and large-scale service companies. There's things that I can and can't do. So whilst I'm on this period of gardening leave, I'm really interested to widen my network through here, Richard. So thank you for this, because I want to keep the grey matter going whilst seeking my next opportunity. So thank you for the time, and thank you for this great platform that you've set up.
Great. Sounds good. And to everyone else listening, please get in touch with Hugh if you have specific questions. Cheerio, everyone.
Thanks, Richard. Bye.
Cheers.